Hello, hello, and welcome to the Trade With Me series, our very first episode after our pilot episode, which didn't go super well or smooth, but we're going to try and hammer out some of those details today so that way things do go a little bit smoother in the future. So, what we're going to do, guys, is we're going to sit down and pretend like we are getting ready to trade for the day. So, what that means is the first thing we need to do is we need to find our levels. So just so that way you have a little bit of context clues. So one of the first things I do in the morning is I take a peek at my calculator. I put in my high-low for the overnight, and then my high-low and my close action for the previous day, which is how I get all of my various little numbers that you see on my charts. As well, I go through and I figure out what these cool little doohickeys are for the morning report. Unfortunately, for what we're doing today, these won't actually be useful to us because I won't be able to get that kind of historical data. Maybe some point in the future, I'll figure out how to isolate that and figure it out. But for now, we're not going to worry about that. So today, guys, we have randomly chosen April 14th of 2021. The aim of today is we are going to be looking at price action and trying to make trades based off of what we are seeing, based off of the context clues that we gain from our morning analysis of the market. And we're going to hopefully end green today instead of red. Of course, nothing is guaranteed, but the idea is we're here to practice and try to get better at this stuff. So let's rock and roll. All right, of course, right out of the gate, we've got our R1, which is blocking our beautiful overnight high bubble. So that is 413.444. Our overnight low, which is 412. Perfect, boom. Now, let's go ahead, turn off extended hours. Ba-dum-bum, and here's yesterday's activity. So we've got 411.12 as our low. Wow, it's kind of spooky how close our price action is 1 year ago on April 14th to where we're at right now. Yikes. But anyways, so we got the low. Okay, high is 413.53, and we closed at 412.86. Boom. So that's going to give us all of our cool, fun levels to play with. Now that we have those levels, we are going to go ahead. I don't know why I did a different window. And we're going to do a different window just because I don't know how on-demand is going to mess with all this stuff. Where is it? Okay, we're still paused, right? All right, good. So here we have our handy dandy monkey bar chart, which is how we're going to add our levels. And we're going to go ahead and we're going to readjust all of, no, we're not going to readjust all of them because that's going to mess me up for when we're doing the real thing. So what we're going to do is we're going to save this as a new drawing set, and this is going to be practice levels. So that way I can mess around and move these without hindering myself. So we're just going to move some of these down so that way they'll be a little bit easier to see. And I don't want to redo all these lines because that would be a pain in the butt. Nope, not what I wanted to do. There we go. We got you. We got you. Now for future episodes, I'm probably not going to go through this whole process again, just because it is going to be a little bit time consuming. But I figured for our first run-in, it'd be a good idea for you guys to see the process. That being said, I do have a full-blown video that I did in which you can see this process done out if you would like. All right, good. Now we can actually start moving those around. So here's our previous day value low. Boom. We're not going to go for super accuracy here. Because believe it or not, we don't need super accuracy. We just need to be close enough for visual clues. Oh, there you are. They were hiding on me. Value high, high. And the other cool thing that I've found over time, there's actually a script you can utilize that will give you a lot of these metrics already. The only reason that I don't like to use that script is because it doesn't include labels. And for some reason, I really, really like my labels. So that's why I don't use them. And of course, for you, you guys watching, all one of you today, if you do have any questions, please just drop it into the lounge chat, and I'll definitely try and answer them as we're going. Especially when we get to the actual trading portion, because there's probably going to be stretches of time where nothing exciting is happening, even though we're going to be in 3 times motion. All right. Overnight high. Overnight low. And we'll get our S numbers. We'll start with our R's. Nope, I lied. We're going to start with our pivot point. That's what we're actually going to start with. Ooh, should probably make sure I speak up and enunciate too, not like I'm just kind of droning on into dead space. Halfback. 412.33. Of course, for the replay too, guys, if you're watching this in the replay, we will eventually put in some time tags in this, so you can skip all this stuff and move to the actual trading if you're not interested in it. But if you're watching live, that is, for those of you speaking English at home, you are a captive audience, which is my favorite kind of audience, because I get to make bad jokes and you can't skip away from them. We're almost done with this part. This is arguably the most time consuming, is just drawing up the levels, because, even we haven't even actually started our analysis of what all these different levels are going to be telling us for the day. But having them as reference points, as you'll see, as we kind of go through the process of figuring out, what's going to be the high odds move, where is everything, what's going on, you'll see that they make sense. Of course, one thing I am noticing, we're in a pretty tight value right through here in consolidation. So that leads me to believe that, given what we're seeing today, probably just going to trickle a little bit. Today may not be a super exciting trade day to have chosen as our random day. But the whole idea of it being random is I don't want to inadvertently know what's going on. That's going to mess with me. All right, so tricky part is done. However, we are not completely done. Of course, I just messed with all of these things the other day. So trying to remember what is what. I think it was Candles Daily is what I've been using. That sounds about right. Yeah. Yep. Okay. Awesome. Where did you go? Practice levels. Ooh, all the way up here, huh? All right. So we're not really super interested in our short-term ones, but what we're going to be looking at now are our more long-term levels. So this is our 90-day. And one of the first things that we can kind of see that's going on here is our current price action. Wow, we had quite a gap up from this day to this day. And it seems that value is absolutely lagging far behind where our price action is moving to today. So that's pretty exciting. That's some cool stuff for us to be messing around with. So we'll move our 90-day value zone. 90-day value high. So another cool thing to note is while we may be revisiting some of these levels presently, look where value was, in accordance to the context. Our value is still up here, even though we're trading down here. So at the present, we are trading below the longer term value. 90-day point of control. Fantastic. Okay, so that's our 90-day. Come on. There you go. All right, we're going to go ahead and do 1 month, 1 day for our midterm. That's near term. There's midterm. So wow, even on our midterm chart, value has not been dragged up with price yet. So these are good things to be noting as we're building out our levels for the day. I guess we're not going to worry about any VPOCs yet, although we'll look at our market profile to figure those out. All right, so that's going to be our midterm. Those are pretty gosh darn close. We'll touch up this midterm POC a little bit. Now, I'll be very interested to see where our near term is looking. So we're going to go ahead and do 5 days. 1, 2, 3, 4, 5. No, you know what? We're going to do 7 days. 7 days is where we gapped up and kind of started this this little exercise. 4, 5. Yeah, we're going to do 7 days. So I don't know if you guys have heard me. Oh, that's 57 days. That's not what we wanted. If you guys have heard me talking about it before, but your near term and your midterm, they're definitely going to be a little bit more subjective, subjective to your thought process. And there isn't necessarily going to be anything that's going to make you right or wrong. But over time, one of the things that you'll hopefully notice, or you'll hopefully get better at, is that your ability to determine where the current near term is will get better and better. And the more you can tune into that, the better your analysis is going to be, and the better your overall, levels. I keep clicking the study trying to get the line to move. All right, so we've got our near terms now. Good, awesome. Okay. We're going to go back to our 3-month, 1-day look. So I want to get an idea now of where our major levels are, because they're going to be more important to us than our minor levels. The minor levels look great. It's good to know because obviously that's where the current activity is happening. But it's our major levels that are going to give us more of a tell as to what's currently going on, just strictly based on price action. So the first thing we can see here is that on this gap day right here, so 4-8, we had a low test. And I want you to notice this because this is super significant and this is something that you're going to want to always pay attention to in the future. A new beginning almost always starts at a point of control or a high volume node. Now, what do you notice about this? We gapped up, we tested low, and now we're distributing, right? This market is moving. This is not a balanced zone yet. We have not found an unfair high as of yet in our current market activity. So yeah, just cool little things to note like that. Now, if you look back, you can look at the 90-day POC, you can look at the midterm POC. You're not going to see that same kind of reaction because now remember, these lines are drawn based off of more aggregated information, right? So if we were looking back here during the near term, this probably was a significant spot, right here for the market to bounce off and away from once it tested. As you can see, this resistance right here came back down to test. And then, of course, this is where we took off and then made that other big gap through. But yeah, just something, something cool, something to pay attention to for your analysis. So the next thing we're going to do is we're going to use this to kind of figure out what some realistic upper and lower targets could potentially be for us while we're trading today. So recognizing that we're starting to break away from our near-term value high, what this says to me is that if we end up having a red day, the most logical place for us to test would be right around our point of control, or kind of where this high volume node is developing in this shorter term time frame. And by short term, I mean like 2.5 days or 3 days realistically. But that isn't really a concrete point. And we want to have something a little bit more to the extreme, or no, sorry, that is incorrect. I don't want something more to the extreme. So we're going to say that our t plus 2 value high is where our potential low target is going to be for today. Let's go ahead and move that there. Good. Awesome. Now, of course, if we hit our lower target, that then has us, kind of looking at information differently. We'll address that if and when we come to those points. So if we do encounter a point where our target is actually hit during the day, then I'll kind of walk you through the process of picking a new target beyond that. But it really isn't pertinent to kind of worry about that because you won't have the information available to you yet to even make a decision based off of that. All right, so as far as upper targets go, well, let's see. Our overnight high, our overnight high is already starting to match with our previous day high, so that's something that we want to take into consideration. We have our ultimate trend line. This is a trend line we haven't seen in a long time, but this is the trend line that the bull market highs kept following and following until we finally kind of hit that terminal point right around November of last year. So that's something that actually could come into play and something we should be aware of. Now, the only thing that would have me hesitant of using it as an upper target, well, when we look at how much distance this particular day would have to cover just to hit that trend line, that's pretty intense. I mean, that's even bigger than a really fast moving day. It's not impossible, of course, but also looking, it's above our R1, our R2, and our R3. And as we noted earlier, when we were kind of looking at the value zones, they were definitely starting to get thinner, right? So a lot would have to happen for it to hit that target. Not impossible, but a lot would have to happen. So we're going to do something a little bit more realistic. And we're actually going to use the R1 point as our upper target. And the reason R1 is going to be our upper target is because if today proves to be a balancing day, or if we end up finding that we've got an unfair high building, at which point, we'll start a little bit of a descent, that's a very logical place for our price action to ricochet off of. And now the cool thing is, if we end up crushing that target, we don't really have to struggle to find our next targets because we've got R2 and R3 right above that. And of course, if we end up going through R3, well, then we've got our trend line above that. So that's it for that part, guys. We've got a pretty solid idea of what's going on with all of this. So now we're going to look at things in a little bit more of the more immediate activity and action and what's going on, so we can kind of build our opening thesis for what we could potentially be seeing right out of the gate for our back to this. That's right, because we need that overnight information. Oh, this is the wrong chart anyways. Oh, pardon me. All right, good. We're still paused at the correct time. Fantastic. I was worried for a second that that might not work for us. All right, so we're going to go ahead and update our drawing levels so that way everything is as they should be, so we can kind of see things accurately. Oh, there's one other thing I forgot to do. So one thing I do to my drawing levels for my other charts, and you can see my other charts right here. I'll just show them to you real quick. I don't have the entire level set on every single chart. Most of these charts over here, I'll actually use just the major lines. Just because it can tend to get a little bit cluttered if you are looking at everything. And when we're zoomed in on the 1 minute chart, I mean, our more near-term stuff is all spaced out, so it's not going to really get in your way, so to speak. But for our other things, that it absolutely can. All right, so we've got our practice levels. Save as a new drawing set. Practice levels major. And we're going to go ahead and we're just going to delete all the lines that we don't need as part of our, excuse me, yikes, minor. Just going to clean up some of that clutter for our other charts. There we go. All right, no more? Okay, good. Oh, and there's that trend line I was talking about. But that's super far away. All right, so let's make sure our other charts have the appropriate drawings on them. Practice levels major. Practice levels. Practice levels. Cool. All right. So before we start off the day, I'm going to go over my other chart because it's one that you guys won't be able to see readily as we're going through this. So this is my quad trader profile. Real quick, just to kind of show you what's going on here. We've got a 5-minute chart where I'm running my wolf wave study, which kind of just gives me quick drawings based off of, oh gosh, what do I have it set? 21? Yeah, 21. So, or no. Yeah. So 21 bars on my 5-minute will generate some pretty automatic support and resistance lines. We don't use those religiously, but it can be easier just to see them kind of drawn out quickly. We have our major levels on our 5-minute chart, and this is going to help us kind of determine the tone of the day, or I should say more of the short-term tone. So we've got our 200 moving average, we've got our 13 and our 48 EMAs. We also have a 15-minute chart down here that is giving us a 5-day view, so we can kind of see what the price action has been doing over the last 5 days. I find the 15-minute to be particularly useful for building out the larger channels that the market may be trading in. Just because sometimes you can see things on the 15-minute that you won't see on the 5-minute or the 1-minute when you're trying to trade, and recognizing where there's potentially a support that's been tested a couple of times throughout days, that can give you an idea that, oh, this may actually be a breaking point for the market. Over here, we have our expanded monkey bars, which is going to give us TPO profile information as the day builds out. And then we have something new that I've just started messing around with. This used to be the corner that I used for my regular monkey bar chart. So with my regular monkey bar chart, it was just the standard monkey bars. And the information that I got from it was pretty similar to what we're seeing here. But what this chart allows me to do is it actually allows me to draw on it, which I couldn't do with the regular monkey bar charts. So it's a lot easier to see where there's weak spots in the market, which you can also see reflected in our volume profile. And each day also has its own volume profile built out over it, which is super helpful as well, because we can see where previous points of control were for the past couple days. And we can also see where the value high and the point of control is in our 5-day span. Awesome. Okay. So that's everything. We are good to go. Let's hope this works the way that I'm intending it to. And yeah, rock on. We are officially playing at 3 times speed. Now let's see if our bars start moving. Okay. So market is now opened and we are watching our activity building out. So we don't need to worry too much right out of the gate. What just happened? Oh, geez almighty. Okay. So I didn't really see anything that looked like it would be a good early trade. The only thing that I could potentially see is that our overnight low may be a support that we should be looking at. We've got kind of a thin area here in our volume profile for the overnight session. So what we can tell that's happened so far is that we've built out this distribution up here. And then as we got closer and closer to open, we actually saw the market fall and then kind of start a new distribution right down here. Now, overnight information isn't going to be super rock solid information. Of course, it's weak hands, it's different things going on, but it's still good to kind of know what was happening. Now, of course, you can already tell right here. So with these 3 bars, so 3 minutes in, we've accumulated a whole lot more volume trading down in this distribution than we did up here. And I mean, you can watch as this builds more and more volume. You can just watch this one shrink. Not that the volume is disappearing It's just, for perspective purposes, it's pushing away. So we've got a poor low building. Why doesn't that look right? It looks like it's correct. So this right here, that actually moved really freaking quick, but that hitting and that super long wick, we would have taken a long position off of that. So we're going to assume we're in a long position, just for the sake of argument, because after we broke back through, we would have done that. Right here at this point of control, this is where we would take our first piece, all right? So we would have taken a piece of the profit off of the equation. We don't need to mess with anything above that. And now that we can see that price action starting to push above it, we would actually move our stop loss to the point of control. So if it turns around, we'll end up getting stopped out, but we're still going to take some profit on that. Because we've still got some fighting going on here. And based on what we're seeing with our moving averages, so we've got our 200, our 48, and our 13, there's nothing here telling us that we should be bullish on the day yet, other than the fact that we've kind of been in a pretty crazy uptrend. So we're about to hit this thin spot right here. This is where we would take our next piece of profit. Why would we take our next piece of profit as we're starting to enter into a thin zone? Well, from recognizing bell curve distributions, the thin zones are generally where trading activity ended. And if it ended there before, there's good stance to reason that there's the traders of the opposite nature who are hanging out there, kind of waiting. All right, so we've got our first piece of profit riding up to our point of control, our second piece of profit to our 200, and now we're going to let this last one ride. All right, we're starting to get some crossover here, but the other thing to note is we've got a lot of separation between our moving averages and the current price action. Now, a lot of times people who are not super informed, that's probably the nicest way to put it, they would jump into this movement right here, not recognizing how far we've pulled away. And of course, if we're entering into a full-blown, distribution off of this overnight low, it's fine. They're in a great position, right? They can just keep riding it. But boom, look at that. That was a pretty insane wick that they would have had to stomach. And chances are, watching that recede all the way back through the 200, they probably would have gotten out of their position. Now, of course, remember, our minute candles are moving in about 20 seconds time. And of course, because we have on-demand features going on, it's kind of choppy. So we're going to do the best we can. Obviously, this isn't going to be super accurate as far as what you could expect for P&L. We're going to be using the 200 as our stop loss for taking our profit. Now, what I mean by that is we're not going to actually put our stop loss at the 200 because, as you can see, we've already got a wick that pushed through that. We're still in the morning volatility and anything can happen. What we're actually going to look for is a candle that closes below the 200. If a candle closes below the 200, we're going to go ahead and take that last piece of our long position off. Otherwise, there's really no reason to not let this keep running. I mean, we haven't even come back to test our 13 moving average yet. I think, I'm going to keep letting this run. And after we finish the position, what we'll end up doing is we'll take a peek at the contracts that we would have played at these points, and then we'll look at the contract pricing to figure out what we actually realistically could have taken out of today. Of course, I'm a little disorganized, so I don't have my correct notebook in front of me. Oh, wow, we're about to hit that overnight high. Yeah, we're just going to keep letting this run. But now instead of our 200, we're actually going to use a candle closing below our 13 as our closeout point. Look at that. Ooh, nice pushback at that overnight high. Now, we absolutely could have just used that as our target for taking our profit. But remember, we've already determined where our upper target is for today, right? So, we could hit some resistance here. We could end up getting stopped out. Whatever, them's the ropes. If everything's still looking bullish, we can look for our next entry play to still play towards our upper target, right? Because that's not out of the equation yet. Let's see. So we would have entered on this candle, 933. I just want to write this stuff down so that way we've got an idea for when we're looking at the contract chart to figure out how everything would have went. We closed at our point of control, the first one. So that would have been our 934 candle. Wow, that happened quick, huh? And then I believe we took our second piece once we got to 935. Yeah, that was really quick. We had already taken a good chunk of profit on that play before we even kind of caught our stride. So we can see that the market is definitely starting to consolidate up here. And a lot of times people would see that and be like, oh no, this is the reversal. Well, we have to take the things into context, right? Well, we've now just created a point of control up here. So that's something to be aware of. We have now traded more volume in this stretch of time right here than we did down here. So that tells us that this is a more readily accepted price than this was. So the odds of rotating down actually starts to diminish quite a bit once we get to that point. And sure enough, we can see that the next push was in fact a break to the upside. Could be a false breakout. Those are very frequent in the market. They're a strategy that the big boys will use to try and kind of shake out any of the positions that are counter to the move that they're trying to take. However, when we also take the overall context of the market into consideration, everything's on an upslope. Everything's moving up. So again, the odds are not in favor of us finding a reversal yet. We're still looking for that unfair high price. Eventually we'll find it, but we just have not found it yet. Getting closer and closer to hitting that target. So one other thing that we would actually do when we do have a real legitimate target, we would actually want to stop ourselves out a little bit before it. Now, the reason being is because since it's a logical target and it's a logical turnaround spot, we want to make sure that we get filled at the price that we want, and we're not guessing at what it's going to actually hit right as it gets up there. So we would end up setting our stop loss probably right around 413.83. Ooh, that was quite an aggressive drop down. I'm going to have to make a judgment call. I think this probably would have scared me out of the position. But just for GPs, we're going to let that position play out. And again, because this is on demand, it's virtually impossible to tell just like how everything's going to move and react. Here it is. We're going to get our hit. And boom. Okay, this candle would have kicked us out on our trigger. That is our 959 candle. We will assume, well, no, if this happened over a minute and we didn't have an actual stop loss in, remember? Maybe, I mean, this wouldn't have even put us below profit. No, you know what? Considering it was the last contract in the play, I think we would have held that one. Look at that, guys. Right where I said we would take our profit, right? Because that was our upper target. What happens? We have that immediate reversal, and now we're getting a real test of this movement upwards to see where we're going to find some balance. So it looks like there were some sellers that were hanging out up here waiting. Now, this isn't voodoo witch magic, all right? This is just picking logical targets based off of the information that we have from the market. Now, obviously, it's always great when you can look at it and be like, oh, hey, look at that. I friggin' nailed it right on the money. But now, of course, if this just flips right around and then crushes our target, well, then obviously we sold too soon, right? Wrong. We didn't sell too soon. We sold exactly at the time that we intended to. We opened up a play with a destination in mind, and we played the play to the destination. So at this point, that play is done. That play is over. We're not going to be looking at it anymore. We're not going to be concerned anymore on whether or not we could have made more money. We made max profit on that play. We hit all of our targets. We took everything. So what we're looking for now, we've still got this pretty incredibly bullish tendency as to what's going on. So realistically, we probably would have wanted to get back in long off of here, but we're going to go ahead and say that we didn't because I was too busy explaining things, and I don't want to get in the habit of turning this into too much of hindsight entry, like, oh, hey, that looks like a good spot. Yeah, let's enter there. No, I want to try and do these more on the fly, because that's how real market action is going to be playing to us. So what we're going to pay attention to now is whether or not we end up making a higher high or if we start making a lower high here. So this is giving us a little bit of information that we may have actually achieved our current channel high right here. So we're going to start to draw this one out. Hopefully nothing cool and fun happens by the time we get all this situated and set. All right, so that's going to be our unfair high. And then after our unfair high, or after our buying high, we have our reaction low. So at this point now, we've got our high, we've got our low. This is kind of the channel that we're looking at right now. Our point of control is actually where the low is, so that's pretty cool. And we're going to be looking for this to test these levels. Now, we're not going to buy in on the first breakout. Oh, nay, nay. What we're going to be looking for is we're going to be looking for the breakout to test the level. So we want the breakout to come down, consolidate, and run. If the breakout comes back in, we're actually going to be looking to take a short position. Vice versa, if we move down to the low, we'll be looking to take a long position from that same principle, that same thought process. Because essentially what's happening now, what you are seeing in live time, is this is what we call a market campaign. This is when we have this balancing motion back and forth kind of across an area in which the big boys are trying to accumulate a position for the next push. Now, they're trying to accumulate their position based on where they think the path of least resistance is going to be. So if they think that the path of least resistance is going to be up, what they're going to be doing is they're going to be trying to push the price up high enough to get anyone who's hanging out up here as a seller to sell them their position. Once they've accumulated all of the selling orders that are kind of hanging out above this upper target, that's when they'll make the final push to try and crush through it. If they've done a good job, if they've absorbed all of the selling orders above that level or near that level, then they shouldn't run into any resistance, and we should have our next leg till we find another area of consolidation. Now, vice versa, if instead they're trying to look for the path of least resistance below, what they're going to be doing is they're going to be trying to buy up all of the supply so that way there is no supply. And if I just got that backwards. What they're going to be doing is they're actually going to try to flood this area with supply. So that way they can test the buyers and they can exhaust them out with people that will continuously buy up the supply, until eventually there aren't enough people left to buy supply, which at that then point, they can flood the market with even more supply, which is going to drive the price down dramatically. Because if there's no buyers and all of a sudden a lot more supply hits the market, you're going to see what we call a liquidation break, right? Get it? They're liquidating their holdings, their positions. Aha! Now the terminology is starting to make sense. All right, so we're getting our first test low. One interesting thing that I've kind of noted about utilizing the 13 and the 48 moving average, I find that a lot of times when we hit the 48 and move back through the 13, if that peak does not peak above the previous one, that's a spot I like to take a short position on. The only thing that would make me maybe not feel super comfortable about doing that is that we are in a consolidation zone. And ideally, you don't want to be opening your positions right in the middle of it. Ideally, you want to be opening your positions towards the ends because that's going to give you the best risk to reward ratio. So we'll kind of see where this ends up bouncing to. Looks like we've got some resistance right up around here. So that's where I would expect this to drop if we want to try and take that short position. Yep, looks like we may have missed it, but that's all right. Again, those would be riskier plays. Because, of course, we still have some pretty bullish sentiment. I mean, we're above our 200, we're above VWAP. We've still got a pretty decently sized blue cloud on our moving averages. And, we've got to break this POC if we're going to come crashing back down. Now, the other thing to note, we have a poor high that is developing on our profile for the day as well. Now, traditionally speaking, or I guess traditional wisdom would tell us that poor highs generally will be revisited. When they're revisited, we haven't the foggiest clue. There's no way we can possibly know that. But that does lead us to believe that if we get some action down here to our 200 and our VWAP, it may behoove us to look for a long position. So this even right here could potentially be our long entry. But now we're getting the break. The false break. So we're going to go ahead and we're going to snag a long position. And right here, we would have sold our first piece because we do still have this descending line. And now we're going to go ahead and use our second stop right there. That would have stopped us out. And our third stop is going to be right about break even. If we end up breaking back up through, we'll move the stop up to adjust. Because if that was the false break, then this should, in theory, go set a new high. If it wasn't the false break, we'll come back down and test it. We'll get knocked out of the position, and then we'll be ready to take a new long position if everything kind of points that direction. Ooh, and we're out. Okay. All right. We got stopped out there. That was a quick play. Let's see. We entered 1024. And then we sold first position 1025, and we got knocked out 1026. Cool. All right. So we had the break, the push. So now what we're going to look for is to see if this comes back up to our channel and it doesn't quite make it back. So at this point, we've got something kind of changing in the air. We've broken below our 200. We've broken below our VWAP. All right, we just wicked off of our line. So potentially now we're going to be heading down for a little bit of an exploration. Let's see how this plays out. I don't trust it enough to take a short position here, especially not with all the bullish sentiment that we've kind of been building. And again, also thinking that we've got that poor high developing on the day. So it just doesn't make me feel comfortable trying to get into a short position here. And I'm glad we didn't, because look at that. We just shot right back inside of the zone. And now it looks like our first false break was not the false break. It looks like this one actually was our false break. So, whatever. You win some, you lose some. If we had waited, we could have taken another entry. But the fact that we broke already didn't make me feel comfortable that that wasn't a real break. Supports, resistances, we're only going to slam our faces against them so many times until they do break. And once they have broken, they're pretty weak at that point. There really isn't anything that tells us they're going to be strong and hold. But now it looks like we sure enough are moving up to the upside. And if this was our false break, you're going to see a prime example of how the campaign works. They were able to exhaust all of the people who were hanging out, and now they can push us up. Look at that. Look at that. Now, this is going to be a real break. However, I wouldn't bet money on that. Maybe if I was a little bit more experienced, I would, but I'm not experienced enough. I mean, we did have a breakdown here that failed and came back up, but I mean, it could do the same thing. And if it does do the same thing, what then actually ends up happening is we get a second set of channel values to look at. So actually, it looks like it might be doing that. Wow. Okay, so we're going to give ourselves a second set of channel values now. Fantastic. Oh, man. How are we doing on time? Oh, we're up to 10:37. All right, cool, cool, cool. Now, of course, we were 2 for 2 today, and that first play, we probably actually made enough that we could quit here if we wanted to. On a normal trading day, that's probably what I would do. But since this is just practice, we're just trying to get better at reading price action and how things are moving. We are going to go ahead and let this keep on playing out so we can perform some analysis and yeah, see what's going on. So it's really cool though that we got some examples of some really good channel play to go over today. We saw the unfair high get created, which then led to the reactionary sell-off, which gave us our low. We had our first test, which didn't come up to the high, which generally speaking, if you're unable to make the full test, that's in favor of the sellers. But it looks like it may have been just a trick as we got our break, we got our false break, and then a push to the top for a test. But now that we've already gotten this breakdown here, this would tell us that we should be probably a little bit more suspicious. I mean, again, we've got our 200 and our VWAP. And of course, as we watch price action kind of fail to get below that, that's a pretty bullish sign, right? So I don't think I have the experience to want to get into a play yet. I actually think I want to see this consolidation zone break. I mean, we could take some little snipes at the tops and the bottoms, trying to play back towards the middle until it inevitably breaks. But I don't know, just kind of seeing this now where our support's gotten hit a couple times and it looks like we're struggling to get back up. This is having me lean a little bit more bearish as things are kind of developing. So we'll wait for this next peak. If this next peak isn't able to at least breach the threshold of our R1, similar to the way that our support just breached, we may be looking at an actual break and rotation down to test some of those lows. Because this high right here, oh, that's actually something good that I should have noted and wasn't even paying attention to. This just corrected our poor high. So that's no longer a factor that we need to be considering for upward movement and momentum. So right now, everything's kind of on even footing, except I'm leaning more bearish because of the amount of times we've been kind of hitting down here at this support. I don't want to open a short position down here. This would not be a good risk to reward zone. I do want to wait to see if we end up breaking, testing, and moving. So our short entry would either be the break, test, enter, or it would be on the next peak that fails to make the higher high. And of course, if we end up making a higher high, then we're going to reevaluate. But strictly from a, ask yourself, what is the market trying to do? Well, it seems like activity's been trying to push up. How successful is it being? Well, that's a really good question. It doesn't seem to be being super successful with getting interested buyers above the overnight high. Well, if we can't generate enough buying interest, then this very well could be a campaign, a distribution campaign, as they're called in Wyckoff theory, which means our market makers, our big boys, our big players, they're trying to accumulate all the buy orders so they can then flood the market with supply to bring us down to a little bit more of a reasonable level. All right, but it looks like our bearish thesis just kind of got blown out of the water. I'm still going to kind of pay attention to this because it could just be another test of the high. But the fact that this peak is higher than the first one, we're not going to enter our short position. Man, that upper target has been a tough one. But that's the other cool thing. As you do get better at analysis and kind of looking at these things, your targets are going to make a lot more sense. And just the fact that the market is struggling so hard to push above that, at least in the early session, we are still pre 11 a.m. These are just good things to take into consideration, good things to note. And eventually this zone's going to break. I mean, that eventually could happen at, 3 o'clock p.m., but the market can only consolidate for so long. And oftentimes, so here's another good note for everybody to recognize. The longer a consolidation area goes on for, the more proportional the eventual break and move will be. So if you have consolidation that lasts for a couple days, you can expect the eventual break to be pretty violent. And vice versa, if you have a consolidation that just goes on for a very short period of time, the odds of the move are probably not going to be, super explosive. Just for example, let's kind of look at where we hit our first small little consolidation area. The movement was just pretty much comparable to the morning movement. So we went from here to here, consolidated to here. Now we've kind of hit this bigger consolidation zone. You can see a little bit more clear on our 15-minute, on our 5-minute. Oh, man. Sam Adams porch rockers. If you've never had them, do yourself a favor. This comes down to test the support again. I think that'll be our break. But look at this. Our wolf waves has given us a trend line that's been pretty well respected. Now, of course, eventually it will be disrespected and broken, and we can see that we are starting to kind of get that. We've got some price action starting to break below the point of control. We did have some pushback there, so that could have been it. That might be the nail in the coffin right there, that pushback to the point of control that couldn't get back over. And now we are seeing the breaks of our support. Let's see how much it can break. Ooh, man. Strong pushback off that 200. But look at that. Off the point of control, there was a decent pushback as well. So it looks like we're going to have a little bit of a fight here between our point of control and where our VWAP and our 200 are, and where our support is for this channel we've been building. So we'll now get to see if the big boys were successful in their campaign, or if they're going to fail and they're going to get overwhelmed. Oh, we have it. Point of control starting to get dragged lower, and there she goes. What's going to happen? Woo, look at that. All right, well, we've got some pretty solid volume on that break. So now we want to look for the pullback to play a short position off of. Unless, of course, if price action gets too rejected. Yeah, it looks like they're encountering a little bit more resistance than they probably anticipated. But again, if they did the campaign right, this should move proportionally, right? So we had this entire area. So from here to here, time distance. But man, there is a lot of buying volume. So it's a tough call. I mean, I could say they're going to be successful. I could say they're not going to be successful, and you'll probably have to flip a coin here. But this volume is pushback. It's going to keep me sitting on my hands. Of course, we could look at it from the perspective of we're already well up, so we could just take a one-off right here off the point of control and see what happens. So the price action's pushed back up above the developing POC. It's fighting with the 200 and the VWAP. I mean, if we didn't have such bullish activity in the overall market, this would be a great place to take a short. I don't know. My gut just tells me not to trust it, though. So risk to reward, statistically speaking, just from what we see, this makes sense for a short. But my gut tells me not to enter short. It's also not telling me to enter long, but we'll see if I'm right or wrong. Man, this is really hard consolidation on this point of control. It's just such an accepted price right now. All right, about 15 more minutes, or well, in 3 times sped up, that won't quite be 15. It'll be more like 5 minutes. We're going to go ahead and take a peek at the contract chart just to get an idea of what we would have made today based off of our play style. Wow. And this is a pretty good illustrator of, you don't have to play everything. And at least for right now, I'm glad my gut kept me out of it, because I mean, this kind of consolidation, this would be giving me a headache, because you'd have to be stomaching the red for time, and you'd have to watch theta just chew on your contract. And then, of course, you do have the moments where your gut was wrong, and that's okay. I mean, if the big boys do their job right, then they should make you feel uncomfortable. You know, if they're really trying to push the market down, they want as many of us out of the way as possible. If they're trying to push it up, they want as many of us out of the way as possible. You know, they want to eat our orders and convince us to sell our orders prematurely. Yep, here we go. But I think on that note, that's going to be where we're going to wrap up this segment and section. Like I said, we are going to go ahead and check out the contract pricing, just so that way we can get an idea of, you know, what could have been. So let's see. We opened up right around 412.75. So if we opened up at 412.75, that means we would probably have been playing 2 in the money. $412.75. Well, we didn't take any short positions, so we don't even have to look at that. Wham bam. Ah. All right. So let's see. For our first play, we entered on 933. Now, there's no way we would have gotten that awesome price all the way down here. So we're going to be a little humble. We're going to say we would have picked it up at 0.34. Then we would have sold our first piece, 0.37. Wait, is this the right one? 12.75. Man, contracts were just really cheap back then. Holy crap. Well, I guess in a bull market like that, the implied volatility would be pretty low, right? So maybe we wouldn't have been playing 2 out of the money since the IV was lower. So let's look at contracts. That would reflect a little bit better. So if we were trading on the cash account, we'd be looking for something between 100 and 150. Let's see what 413s looked like. Oh, wow, those would have even been cheap. Holy crap. I guess we would have been playing at the money. Yeah, that's right about where the price that we would be playing with. Say 126. $139. And that probably crossed right about. Actually, we're going to move this screen back up here just so that way we can cross-reference where the cross happened. $9.35. So that happened right. Oh, wow, it did happen almost at the peak of that candle. All right. It's 1.44. Bada bing, bada boom. And then our last one was at 9.59. And that was hitting our target on the nose. Boom. What a play. All right. Yeah, you know what? We would have stayed on these contracts for the next play, too. 10.24. Oh, that one was real quick. So we would have entered at 1.6. Taken profit. 1.73. And that would have been times 2. And then we would have gotten stopped out at 1.62. All right, so our second play wasn't super awesome. So let's go ahead and tally these up. So we're going to say we were playing with 3 contracts because that is our norm. So for our first contract, we made 13 cents. On the second contract, that would be 36, 4, 14, 18 cents. And on the last one, 73 plus 4, 77 cents. Bam! That was a nice hit of the target right there. See, in our last one, we would have gotten 13 times 2. And then times 0.02. So let's total all that up. Handy dandy calculator. All right, guys, this is it. Moment of truth. We made 2 plays, and we were done by 11:30. We took 13 cents plus 18 cents plus 77 cents plus 26 cents plus 2 cents. Ladies and gentlemen, we made $136. Woohoo! Awesome. Okay. Well, you know what? We're going to write that down, and we'll carry that forward to our next episode of Trade With Me. I hope you guys had as much fun hanging out with me today as I had trading with you. I say trading with you. I mean, I was really trading with myself, and you guys were just kind of hanging out for the ride. But hopefully, you learned something. Hopefully, some things, maybe that didn't make sense before make more sense now. And hopefully you'll have gotten some things that you can take forward into your next trading session that will be helpful for you. Now, of course, not every day is probably going to go to plan like this one did. This was pretty awesome. I'm pleasantly happy and surprised that our first session did go so well. So we're gonna take that victory, and we're gonna end on a high note. So that's going to be it for our video recording for today. Of course, those of you who are hanging out watching us live, we will now do a Q&A for you. For those of you watching this replay video, if you'd like to be part of our Q&A, it's as simple and easy as joining our Discord. Totally free community, education-based, focused on only trading with the best. And of course, we do live streams like this in which you guys can poke and prod our brains and try and siphon off a little bit of our knowledge and education. And yeah, hopefully it works out for you. All right, guys. Adios. Oh.